Time now to get to the big story breakdown on this Wednesday morning. It is, in fact, the final day of 2025, and no matter how many times crypto investors pinched themselves this year, they didn't quite wake up, and 2025 was not a dream. New SEC leadership, the announcement of strategic crypto reserves, digital assets being allowed into retirement accounts, and many more key turnarounds when it comes to the shifting regulatory environment. They're all catalysts, but despite those catalysts, which were in many ways beyond the wildest dreams of crypto investors, the majors are set to somehow, impossibly, finish the year lower. Who could have predicted all this? Joining me now for the final time this year, a good friend of ours here at the big board, Andy Baehr, head of product and research for CoinDesk Indices. Thank you for being here, and a very happy new year early to you.
Happy New Year. It's a pleasure.
So let's start with a recap here of 2025, all the regulatory progress that has been made, but somehow negative price action.
We had a heartbreak Q4. There's no other way around it. Crypto seems to move in quarters. It's its attention span. So this quarter's in the tank now. We can move on and look ahead. It gives investors a chance to buy Bitcoin below $100,000, to pay less than $3,000 for an Ether token. So it's a great opportunity to look at the asset class anew with all the progress that you mentioned.
Another big story we're following, Coinbase CEO Brian Armstrong taking aim at big banks for lobbying to reopen the Genius Act. We know this passed the corridors of Congress earlier this year. Banks are against paying interest to stablecoin holders, but they're also against crypto exchanges offering rewards. Give me your read on the situation. What should we know for the back and forth?
The Genius Act was so important to get done. July 18th of 2025 it passed, which basically allowed stablecoin issuers to act, to build and to operate in the United States. Circle, which IPO'd right here on the New York Stock Exchange in June of this year, and Coinbase have a relationship. Circle is the second largest stablecoin issuer, and it's become a very important piece of market structure. It's the center of payments. It's kind of the neutral, risk-free asset that people can hold. But the thing is, just like a dollar bill, it's not a dollar bill until you do something with it. Do you deposit it in a bank? Do you buy a money market fund? Do you invest in something? And so this big debate has been going on. There's a lot to unpack about how Circle can share some of the rewards it earns with its portfolio with users. So the way a stablecoin works is they take in fiat currency, they buy treasury portfolios to make that money go to work. Right now they can't share that yield with their investors directly, but third parties can. And that was what was inscripted into the Genius Act. We think it's a really important way to make stablecoins more useful for people. So on that point, the Coinbase argument that the Genius Act is doing what it's supposed to do seems pretty sound to us.
Do we have a sense there's an appetite for members of Congress in a midterm a year where on top of everything else, we may be facing another government shutdown? I don't want to say that too loudly because we just got through the longest one ever. Do we have an appetite from members of Congress who all have to run for re-election in just a few months' time to revisit landmark legislation?
I think they should be looking forward to getting the Clarity Act done, where there is a House proposal and a Senate proposal, and we would like to get that over the finish line well in advance of the midterms. That would let the rest of the market structure, kind of like the global markets of crypto, really kind of put some roots down in the United States and allow people to build. Just on the back of the Genius Act, you're seeing all kinds of innovation and integration around payments and around more ways that people can sort of integrate stablecoins into their money. So, it's going to force people to think a little bit more about where are my fiat dollars? Are they in banks? Are they earning any interest there? Am I in money market funds? Once my money is on chain, what can I do with it, and how do I make sure that it's working for me there? So it's forcing a lot of people to think about money. Maybe that's what the banks don't like. They like to keep things the way they are and have not people revisit what they're doing with their cash. But we'd like Genius Act to stay at least where it is now and focus on clarity in the first quarter of next year.
I got to ask you about Zcash here. It did not get the memo to sell off like everything else. It's an encrypted electronic cash that the advocates say rivals BTC on privacy. It's up over 800% of the year.
It 10x'd in the fourth quarter. It was pretty sleepy. This is a $9 billion asset, right? It's 8 years old. It's built by people who are fans of the way Bitcoin's built. It's a proof of work asset like Bitcoin. It's not a smart contract token like Ethereum. It really just moves from one address to the other. But critically, it can be a private token or it can be a public token depending on which address you use. So if I use Zcash, I have a public address and a private address. I can transact using my public address if I'm okay people seeing where my Zcash is, or I can tuck it away in a private address. So it's semi-private. Even the private address will allow some regulators access into where the Zcash is sitting. So it's a very regulatory friendly way to have semi-privacy. Semi-privacy has been the big theme of the fourth quarter and of much of 2025, with the Ethereum Foundation making comments along those lines, with protocols like the Canton Network offering semi-private solutions for banks who don't want everybody to know where their funds are flowing every second, but would want to be able to provide more information to credit officers and to auditors and to regulators. So semi-privacy is definitely required for full integration of crypto into the financial system. Zcash kind of caught a little bit of a wave and got a lot of energy. Absolutely missed the memo that it was going to be a heartbreak. So just goes to show there's always a bull market. Who said that? Somebody in this room says that, right?
Someone, yeah.
There's always a bull market somewhere.
More than a few people in this room have said that over the long history of this institution. There's always a bull market somewhere.
Yeah.
It's been a while since we've talked about the so-called crypto winter.
Yes.
But I wonder if that chatter is now starting to pick up a little bit more, just to go back to broader price action. What would give you some indication to say, yeah, okay, it's been a few years, but we're officially back in that territory?
Oh, I mean, the regulatory progress and the integrations are in motion, right? And we have legislation. More legislation will be good. We have favorable CFTC and SEC regulatory management now, which really understands the potential and understands that the horse has left the barn. Now it's time to integrate rather than deny and punish. That's all great. Regulators can change what administrations can change, so legislation is very important to get passed. But now there are so many companies operating here. The president wants the United States to be the crypto capital of the world. So the slow money is continuing to move. For investors in crypto, look, picking individual names is going to remain tough. Whether you want to store your value in Bitcoin or go into other crypto assets which represent the growth of blockchain use, you have to be very, very on top of things if you want to pick individual names or try to time the market. We like index products, of course, we're an indexer. Look, the Fed's going to help provide a little bit of tailwind from a macroeconomic point of view. Legislation and continued slow money activity will help from a structural point of view. And look, adoption is going to continue to expand, and that over time should help. So the fourth quarter was a setback, but we feel that in the longer picture, we're unchanged in terms of our optimism.
Andy Baehr, the only bad part about this interview is that I have to end it at this point. Very happy New Year to you. Thank you for joining us as always. What a pleasure to see you, my friend. We'll see you in the new year. Andy Baehr, Head of Product and Research of CoinDesk Indices. See you soon.
You too.